to this next question here. Have you put together a business plan or are in the process of putting together a business plan for the upcoming year, 2017? And we'll give it just a few more seconds here so we can get 100% or as close to 100% participation as possible. All right, so it looks like the majority of you have completed a business plan for 2017. Perfect. Well, this will give us an opportunity to go ahead and show you how Mortgage Coach may help you accomplish the goals that you have in your business plan. So since we're talking a little bit about goals, I'm a little bit curious, what kind of goals do you have for growing your business in 2017? How much are you hoping to grow it by? And again, we'll go ahead and we'll keep it open here. We want to try and get as close to 100% participation as possible. Okay, so it looks like pretty much everybody in the session is trying to grow it by about 20% or more. And I mean, if you're new to the business, the goal is probably going to be 100% because you're just getting started in the business, and the basis that you have, you want to double it or triple it, hopefully. Those that are a little bit more seasoned are maybe looking at the 20% mark. Now, one of the ways that I'm going to be working with you today is to help you put together a way to accomplish your goal of building your business by whatever percentage that you had, and that's going to be by using the annual mortgage review strategy. So I'm kind of curious if you already have that that process in place already. Are you providing your clients with an annual mortgage review? And I'm going to go ahead and use the acronym AMR just to make it a little bit more simple. So again, we'll try and get as much participation as possible. Are you currently providing your clients with an AMR? All right, and the majority of you are not. Okay, which is understandable. And I'm going to go ahead, and that's how I can help you today in sharing with you how you can grow your business. Now, one of the things that's going to be very helpful to you in growing your business is some type of system that you're able to keep in touch with your past clients. So I just want to get a little bit of information about what type of tools that you have that you're currently using to reach out to your past clients. So it might be, you just have some pop-ups in your Outlook calendar, very simple, very basic, Mortgage Coach, or if you have a CRM system, I mean, that makes it really easy if you have something like that keeps you right on point as to what you should be doing. And then you can use that particular system to go ahead and help you in creating your annual mortgage reviews through Mortgage Coach. Okay, so it looks like the majority of you do have a CRM system. Okay, perfect. All right, that's very helpful information for me. Okay, so let me go ahead and share with you a few more pieces of information here. So last year, when you're taking a look at your production, for those of you that were in producing the entire year or even a portion of the year, your production might look a little bit like the blue line on the graph that you're seeing right now. When you take a look at that, it looks kind of like a lot of peaks, a lot of valleys, kind of like the ride at the roller coaster where you have a great month, maybe you're funding a large amount of units, and then the next month it drops off. It's almost like you're going down a dip on a roller coaster. The strategy behind using an annual mortgage review is that you're going to be able to supplement your production with a resource that you already have available to you. For those of you that have been in business for a year, 2, 3 years, you have a database of past clients that you've already helped, that you've already provided a service level to. So you're going to want to go back and complete an annual mortgage review for those particular clients and get in the process of doing that. The reason is it's going to help you with your production and get a level of production that's going to look a little bit more like the green line, a little bit more of a constant line. Of course, you want to get that line up as high as possible, but the strategy is that it's going to help you so that you can increase your production and have a much more level, I guess, line of production, which will affect your income. I mean, it's great to have a good month, but when you go from making, a large amount of money and then the next month you make a significantly lower, it's tough to ride that roller coaster. So the goal with the annual mortgage review is that you're going to be able to utilize it to help you in your 2017 business plan to grow your business. And I would suggest that you set up a goal of a minimum of 10% using this particular strategy. Because in doing an annual mortgage review, you're not going to be able to help every single person that you send that to. But I'm going to point out a couple key points of how you can utilize the annual mortgage review to help not only those people that you've served, but also additional people that you might get through referrals in using the annual mortgage review. So if you stop and think, if you produced 100 loans last year, if you funded 100 loans, 100 families you served, what's 10% going to do for you? How is that going to help you in serving 10 more families? Well, it might help you monetarily. It might help you achieve a personal goal or maybe an organizational goal, meaning that, hey, you hit that next tier of being able to get to a particular production level. It can also create opportunities for you and recognition within your organization. Opportunities, well, maybe it gives you an opportunity to go into management. Maybe it gives you an opportunity to get a loan officer assistant to help you with these type of functions in growing your business. And the thing about it is that an annual mortgage review, remember I said the minimum goal should be about 10% in using this particular strategy. But how can 10% become 20, 30, or possibly even more? The way that that could be possible is that the intangibles. Because again, you're not going to be able to help every single person that you provide an annual mortgage review for. For every annual mortgage reviews that you send out, you might be able to help one person in some type of a new mortgage transaction. But you've got to remember that they have friends, family members, co-workers, that if you're providing a certain level of service to them and you're standing out, you're providing them with a wow experience, they're going to want to talk about you and the experience that they had with their mortgage transaction. So in doing that and providing your borrowers with an annual mortgage review, you can use this strategy to help you grow not just 10%, possibly 20, 30, or even more by recognizing the intangibles and getting referrals. Now, in doing the annual mortgage review, it's very important that you use video in your presentation because video gives you an opportunity to really sell yourself and connect with your borrower. You really want to have that connection so that they see you, they get a feeling for who you are, and they can't get that simply by looking at a fee sheet, looking at some numbers, or that phone conversation. So it's imperative that you add a video to these particular presentations. And as I mentioned earlier, the majority of the annual reviews that you can perform are going to go something to the effect of, the loan that we completed for you remains the best, to be best available for you at this time. However, should you have any questions, should your situation has changed since we last spoke, please feel free to reach out to me and contact me with those questions or concerns that you may have. you're letting them know that they have a great mortgage, that there's nothing that they could possibly do to improve their situation, but you're leaving a couple doors open. If they have questions or if maybe their situation has changed. People's lives, your lives, change from day to day. Maybe you're going to need to do, maybe they might need to do a debt consolidation loan, and you're not strictly looking at it as a rate and term, being able to reduce somebody's interest rate. They have the equity, maybe they need to pay off some debt. Maybe they had a life event that occurred that they need to access some money for, and they don't know that they could use their mortgage as a resource to do that. It's a great way for you to position yourself and capture business this way. And then on top of it, the intangibles, like I said. By providing a personalized message and asking for referrals, it can help you grow your business by 2, 3, 4, 5 times. Now, to implement this strategy, it requires discipline, because in your day as an originator, what are you doing? You're focusing on chasing new business, trying to keep feeding the machine, chasing new business, trying to reach out to as many people as you can, and you forget about that book of business that you've had, and you might not at this point in time have the processes in place just to utilize this source to grow your business. So it requires discipline. And one of my favorite quotes from Jim Rohn is that discipline is the bridge between goals and accomplishment. If you have the discipline to work on your goals, you'll achieve accomplishing them. If you don't have that discipline, you're not going to be able to cross that bridge. And another quote from Jim, success is nothing more than a few simple disciplines practiced every day. And in this case, every month you should be sending out annual mortgage reviews to your past clients from this point forward on their mortgage anniversary date. So when that anniversary date comes up, these are the few simple practices that you have to get in place to do that. Now, creating an annual mortgage review, it not only requires discipline, you have to have the processes in place, and having a good assistant will definitely help you do that. Now, in setting up how you're going to be doing business with the clients, using the annual mortgage review could be part of your value proposition in working with a particular client. You could set them up at the beginning and add that to part of gaining their initial business by having that as a value proposition within your first communication with that client. Something to the effect of, all of my clients' mortgages are reviewed a minimum of once annually on their anniversary date. Additional reviews may be completed during the year should an economic event occur that may help you save money. Does that sound good to you? So if you're positioning yourself with a client and speaking with them on one of your initial calls, if not the first call, and you say something to that effect, how many of the clients are going to tell you, no, that doesn't sound good? You've just differentiated yourself from what they probably most likely heard from the last 3 or 4 people that they've spoken to, 2 or 3 people, or how many other people? Nobody else mentioned this annual mortgage review. Nobody else mentioned that their mortgage is going to be monitored and reviewed at least once a year. So it's a great way to separate yourself. So let's go ahead and share with you some of the practices that you're going to want to go ahead and put in place to be able to accomplish growing your business in this way and in using Mortgage Coach. So I just want to make sure that everybody's clear on what we're going to be accomplishing. I'm going to take a pause here, get a sip of water. If you do have any questions, go ahead and type those in the question area. Be happy to get those taken care of for you. Okay, I'm going to go ahead and take that as we're good to go then. And again, I am recording this this training session, so everything that we've gone over so far is going to be recorded, and you will receive a copy of the recording. So with that, don't feel like you have to take notes or do anything other than just focus on what we're talking about in the training session here, because you'll get a copy of it and you'll be able to duplicate the steps by watching the recording. So some of the things that you want to keep in mind here, the 10 things that I would focus on in utilizing Mortgage Coach to do the annual mortgage review strategy would be the number one would be set up the funded loan, the loan that you just completed. So for those of you that are funding loans in December and November, those would be my targets that I would reach out to first. The reason being is that you're going to want to get them set up in Mortgage Coaches just as soon as possible because the transaction is fresh in your mind. You remember all the details about the transaction. So take a moment, get your annual mortgage review teed up and ready to go for next year when you get that alert saying that's time to send out that annual mortgage review. Real simple, when you set up number two, when you set up a annual mortgage review within Mortgage Coach, it's going to go in the current loan position because remember, you're always going to be using the loan that you just funded as the baseline to compare other opportunities against. And make sure that you're making notes. There's a notes section in Mortgage Coach. I'm going to show you where you can take those notes. A couple things that I think are going to be very important to you to make notes of is, who was the decision maker? When you sold your deal and you had to get the green light from a particular person, make sure that you make a note of who that was, whether it's the wife, the husband, the know-it-all father-in-law, whoever that is. Make sure that you know who that is so that you can keep them in the loop with the annual mortgage review. Make sure you know what their future goals are, potentially what their future goals are. Think back about those conversations that you had with them. What did they say during your communications about, where they might be in 5, 6, 7 years from now? Of course, you want to make sure that you include rapport building points, a little bit about them, personalized. Who are they? What are their kids' names? What are their kids' activities? It really makes it easier for you to personalize your message and build that relationship lending status with them. They're not going to think of you more as just the guy that did my mortgage. They're going to think of you as more of a friend, somebody that really cares about what's going on with my mortgage. And of course, you want to make note of what pleased them and what did not please them, so that you can avoid certain issues that they weren't happy with and really drive across what you did great. Now there's a feature within Mortgage Coach that allows you, once you put a check mark in that box, it'll allow you to have their balance updated to exactly where their mortgage balance should be when you open it up to do the annual mortgage review, and I'll show you where that's located. Now, as I mentioned earlier, you're not going to be able to help every single person that you speak with. So you still want to bring value to your annual mortgage review, and there's a couple strategies that I'm going to show you in building products how to accomplish that. Use a payment roundup, maybe showing them how to invest in mortgage insurance when the mortgage insurance falls off the loan. Just a couple strategies so that you can still bring value to that annual mortgage review that you provide them with. Let them know that you are monitoring their mortgages and this is how they could possibly make some type of adjustment in a positive way. And number 6, okay, if there is benefit to help them with the refinance, always try to have a plan B. What happens in a lot of cases, you might be so excited about your plan A that you might actually paint yourself in a corner, and if you're not able to deliver that plan A, it could kind of affect that relationship with them. So it's always good to have a plan B in addition to the plan A. Should there be benefit in moving forward with one? Maybe not quite as much benefit, but hey, we're still able to help you in accomplishing a new mortgage transaction that could benefit you. Now, if they were referred to you from a realtor partner that you utilize, make sure that you continue to cross-sell that referral, whether it's a realtor, financial planner, whatever the case is. Because again, it really ties the loop of the relationship. Who are the people that are the experts in helping them with their real estate needs? And it also helps you continue to get those referrals. And it could be potentially a selling point with your realtor partners now. So when you're trying to build a relationship with a realtor partner, that's part of the value that you could bring to that relationship. You can tell the realtor partners that you're trying to get on board is, all of my clients receive an annual mortgage review at least once annually on their anniversary. And then just that same speech that I did, but to your realtor partner, and then tell them that in that annual mortgage review, I'm going to cross-sell you as well in that annual mortgage review so that they don't forget not only me, but they don't forget you as well. So it's a great way to cross-sell and also build value with those relationship partners that you want to gain and keep on board. Now, utilize a friendly name in the copy analysis. I'm going to show you how to do that. That's an easy way to manage your pipeline, your mortgage coach database. And then, of course, set their expectation up so that when you do provide them with that annual mortgage review, they're expecting it. It's not a surprise to them that you're providing them with this service. They get the annual mortgage review and they go, oh yeah, there's Jim. Yeah, Jim, he helped us with the mortgage. Remember that? Yeah, here he is. He's going to tell us a little bit about a mortgage. They're expecting it. It's not like, who? Who's our mortgage person? They're gonna, expect it, and they're gonna welcome it, and you're gonna provide them with some valuable content. The video helps them remember who you are. So, hey, it's me. Remember me? I said I was going to do this. I'm your mortgage professional. Here I am again. The video helps tie that in. Okay. All right. So let's go ahead and now jump into Mortgage Coach. I'm just going to take a pause here. Any comments about these? Any questions, concerns? I'm just going to take another sip of water. And any questions or concerns before we go on? All right, well, let's go ahead and move forward then. And again, should you have a question, the question area is open. Please feel free to go ahead and fire away. We'll get those answered for you. Okay, so I'm going to go ahead, log into Mortgage Coach, get my credentials in here, and hopefully you have this site bookmarked, edge.mortgagecoach.com. Save to your favorites. Okay, so here's my client area and here's my partner area. I've created a couple different presentations with the annual mortgage review, and I've created it 3 steps basically. How to set one up, how to provide an annual mortgage review for somebody that has no benefit in a transaction, and how to do one with benefit. So I created an annual mortgage review folder within my Mortgage Coach database. Let me go ahead and show you where it's located. To get to all the borrowers that I've helped, all my clients, I go to the View All button, hit the search, and this is going to access my Mortgage Coach database of clients that I mentioned to you. Now, this is the folder that I created. Now, this particular folder in your database, when you create this, it's not going to have annual mortgage review training. That's not going to be the name of the folder. That's going to be your borrower's name here. And once you've created one presentation for your borrower, you can add analysis, add different presentations to them, and they will be put in that particular folder for your borrower. So the very first presentation that I'm going to share with you is how to set it up. So let me go ahead and open this up. Now, utilizing the friendly name feature, that was one of the 10 goals, 10 points that I had in that slide that you saw. This is the friendly name area where you go ahead and you'll put what you're accomplishing for the borrower in that particular area. And I've named this particular presentation Annual Mortgage Review Setup to help you see the process of getting it teed up and ready to go. So you have your annual mortgage review. This, of course, would be your borrower's information. It's set up in the default position, individual client owned. You're ready to go. Now, this is also the yellow rectangular area that I mentioned in my presentation. And I mentioned the things that you want to keep in mind with that, with the annual mortgage review, is utilize that area to make notes. And the notes that I indicated that would be helpful for you is that, know who the decision maker was. I'm going to go ahead and drop those in. Go ahead and put those in. There you go. Who the key decision makers were, future goals, rapport building. When you make notes in here, it's not going to be visible for anybody other than yourself. So don't worry about that being seen by your client. Now, you'll notice that I've transitioned from the client area to the goals tab over here. And this is typically where you would go ahead and put together the goals that you had in mind for your client. But remember, this is just getting it set up, the initial process. So for those of you that have just recently funded loans in the month of November, you've already funded some loans in December, this is the process that you're going to be utilizing right now. So of course, you'll collect their information. You don't necessarily have to assign a goal because you don't know what you're going to be doing for them at this point. But what you're going to want to do is put in the value of the home, the purchase price, or the appraised value in this particular box here where it says original appraised value. So that way you know exactly what the value of the home is from the transaction that you just completed for them. The next step that you're going to want to do when you arrow over, and I'm purposely not putting a value in this red highlighted field because, again, you have to visualize you're going to be opening this presentation up a year from now when it comes time to do their annual mortgage review. At that time is when you're going to go ahead, maybe do a little bit of research, see if they have potentially gotten some appreciation during that process. So you're not going to put anything in the red highlighted field just yet. Now you're going to go ahead and put in all the details about their current mortgage. So if I funded the loan in November, I'm most likely going to have a January 1st payment. I'm going to put in my original loan amount. I'm going to put in the interest rate, the term, and this is the auto update balance button that I indicated in those 10 points that I had on that slide. So by putting a check mark in this box, when you open this loan up a year from now, it's automatically going to calculate where their balance should be at that point in time. So you could utilize that along with the value of the home in the current market and potentially see if they're in a position with equity to help them and do some type of a transaction. The other thing that it's going to do is it's going to go ahead and have their principal and interest payment down here. So if they did set up an escrow account and you want to go ahead and have everything included, you then go ahead and enter those factors here. So what are they paying for hazard insurance? What are they paying for property taxes? And if they did have mortgage insurance, what are they paying for that? This is a great way. I mean, this is one of the strategies that you could put in place is that, for all those clients that you completed the loan for that have mortgage insurance, do they have equity at this point so you can help them refinance and get that removed? So now you're done. So you've only gone into your Mortgage Coach account and completed data in 3 areas. You've gone to the client area and primarily into the assumptions area. This is what I mean by making sure that you have the data in place about the borrower's current loan. So now when your borrower gets those flyers in the mail and perhaps maybe a call from their existing servicing company to try and get them to do some type of mortgage transaction, you have an edge on them. You know all the details about their existing mortgage because you took the time to go ahead and put that in place. You made notes over here so that you don't have to try and remember any details about the transaction. You're ready to go. You can deliver an annual mortgage review when you get that alert. Okay, so the next one I'm going to go to now, again, I'm going to go to my database, view all, search. It's now time for me to go ahead and do an annual mortgage review for my client. Now, I'm going to go ahead and open up the one that I've already put together, which would have been this one. Open it up, and I'm going to go ahead and label it, or I could do a copy analysis if I wanted to. Let me go ahead and show you that step. I think it's going to be important for you. So if you want to leave their mortgage exactly as it was in the setup position, all you would have to do next is go ahead and do a copy analysis and copy it to the current client, and then you can go ahead and, like I said, add a presentation to it and label that particular presentation Annual Mortgage Review Year 1. And you might make a notation, you know, is there any type of benefit? Can I do anything for them as well? In this particular example, like I said, there's not going to be a benefit. I'm going to show you a couple strategies how you can help somebody and provide value even though you're not able to help them with an actual transaction. Okay, so when I arrow over now, since there's no benefit, I reviewed their mortgage situation, there's no benefit. Again, I don't have any particular goal here. But what I did do, remember, I put the value of the home that we just completed in that purchase transaction a year ago at $300,000. I did a quick review, and they've gotten a little bit of appreciation, but not much, $315,000. Now I'm going to go ahead and arrow over. All I did is I changed the date because, again, I'm flash forwarding. So I helped this particular client a year ago. Because I had this button checked, it's automatically updating me where their balance is at this point in time. I know their PI payment, and of course I entered their taxes and their insurance there. Okay, so I'm going to go ahead and go fast forward here, go through affordability, and I'm going to go right into products. Now, because I can't help this particular client, I still want to send them an annual mortgage review. I'm going to tell them that the loan that they currently have right now is probably the best that they could expect to have. But you know what? There is a way that you could potentially help yourself with your mortgage, and I thought I'd share this information with you. So what I did is I used my copy from button. All you have to do is hit copy from the loan, the current loan, click OK, and you can see the current loan notation here, and I'm not going to do anything for them yet, okay, because again, there's no benefit for them doing something now. So it's in the no position because it is not a refinance. It brought in the value of the home in the current market, you know, where their equity position is, what their base loan amount originally was, where their principal balance is, and their current interest rate. Because I'm not doing anything for them, this particular page is not applicable. We don't have to talk about closing costs. It brought in the monthly costs that they have on their existing mortgage. And I'm going to go right into the analysis area now. I'm going to share with you this one strategy. So what you'll do is you'll go to the analysis tab down here, and you'll go to adjust reinvestment strategy. You're going to click on that button. And when you click on that button, you'll see the borrower's current loan in this column right here. And you'll see the product that you just built, the second one here, the payment roundup. So what you're going to do is, in this case, you're making a payment of $1,709.24. Why don't we go ahead and round it up to $1,800? So we'll increase, or we'll add $90.76 to their payment up here of $1,709.24 in this particular box, reduction payment. Tab out, and let's see what that does for them. So this could be a topic of conversation that I could go ahead and share with them when I'm sending them that annual mortgage review. I could go ahead and tell them, you know what? Go ahead and round your payment up. This is a strategy that can help you become debt-free more quickly on your mortgage. Along with helping you become debt-free more quickly on your mortgage, it will also reduce the term of your mortgage. You currently have 29 years on the term of your existing loan. By rounding your payment up to $1,800, that'll drop it to under 26 years. That'll save you, was that a little over 2 years, 3 years on your mortgage? And on top of it, it's going to help you get rid of that mortgage insurance much more quickly. It'll take a full year off the mortgage. You can see here 61 months versus 73 months. So that's one strategy that you could put in place for helping somebody with your annual mortgage review. So let me go ahead and show you what that looks like from the borrower's perspective. Let me go ahead and do a preview of the presentation. I'm just going to make sure that one product is shown right now. And then, like I said, I'm going to look in the camera. Mr. and Mrs. Looks like I have my message there. About that annual mortgage review that I was going to provide you with, well, here you go. At this particular point, you know, we did a great job for you. We went ahead and put together your mortgage to help you purchase that home. And right now, it's probably about the best loan. I will say it is the best loan that you could expect to have at this point in time. However, should you have some questions about your mortgage, or maybe your situation has changed, and it's real easy to add a video message to it. But you can see in this particular strategy, all I'm doing is I'm showing them by paying an extra $90.76. I made a notation here. By rounding up your payment to $1,800 a month, what is it going to do for you? Well, it's going to decrease the term of your loan from 29 years to 25.67, and it's also going to help you get rid of mortgage insurance more quickly. So that would be one strategy that you could put in place. And again, it gives you the opportunity to provide a video message, as you saw, so that you could reach out to them, provide them with a personalized message, and then ask for referrals. Ask for those referrals. Okay, let me go ahead and share with you another strategy that you could put in place. And that's going to be showing them how to reinvest the money that they were paying for their mortgage insurance back into the loan when it specifically falls off at a particular point in time. So, again, what I would do is I'd go to my product area. I'd simply do a copy from the borrower's current loan. Again, make sure it's in the current mortgage position here. You're not doing anything from at this point in time. It'll bring in all those details. You don't have to worry about the closing costs, and it's going to bring in the monthly costs here for you. Then you'll go into the analysis area, the adjust reinvestment strategy button, and you can see this particular product over here, I labeled it reinvest mortgage insurance. And again, we're going to go to this particular box right here where it says reduction payment. Double click there, and it's going to open up this window. Some of you might not have even seen this window or knew that it existed within Mortgage Coach. Now, if you look down here, it says mortgage insurance cutoff month. It's showing you that on their existing loan right now, they have 73 payments that will require them to go ahead and continue to make the payment of $85 towards mortgage insurance. So you could share with them that on the 73rd month, so you'll come up here, you'll click in this box, enter 73, and this box, enter 85. When you do that, you've now set up the system so that at that point forward on the 73rd month, $85 is going to be an additional payment towards principal, and that $85 is coming from their existing mortgage insurance. And the strategy there is that, you already have that money going out of your pocket every month. You've gotten accustomed to making that payment. Well, let me show you how you can utilize that $85 that was going out of your pocket for mortgage insurance to help you get debt-free more quickly on your mortgage. So once I get that in place, I hit OK, and then you can see that it takes the term of their loan from 29 years down to 26.83 years. So again, it's something that gives you the opportunity to mention how they could help themselves with their mortgage. You're putting together a strategy to help them with the loan that you just completed. You're bringing value to the relationship, and then you can get that opportunity to ask for referrals. Let's take a look at the presentation, see what it looks like with that strategy in place. So I'll do a preview. This time I'm going to click on Generate Link. And then I'm going to show you, make sure that you know where to add that video here. So when I click on Generate Link, this is a dynamic link that I'm going to be sending off to my client. But before I do that, I'm going to click on Add Audio Video. And you can see the custom box there. And you can see the freedom point, how that's been adjusted. Now to use your highlighter again, all you have to do is click on a particular data point. Once you click on it, it will be highlighted. If you don't want that highlighted, just simply unclick it. I'm going to come down here, click on Record Message, click Allow. It'll bring up my camera. Here I am today, different color shirt. Hi, Mr. and Mrs. Smith. It's annual mortgage review time. I hope your year has been great. Thank you again for the opportunity to help you with your mortgage transaction. At this time, it looks like that the loan that you currently have right now is the best that you could expect, but should something change with your situation, or if you have some questions, maybe you've seen something in the media about a particular aspect of a mortgage that you'd like some help with, please feel free to reach out and contact me. I'll be more than happy to help you. Also, I would greatly appreciate the opportunity to serve anybody else that you would like to refer to me, whether you might encounter maybe a family member, friend, or coworker. I'd welcome the opportunity to serve them as I have served you. So I look forward to hearing from you, and we'll keep sending these annual mortgage reviews for you and monitoring your mortgage for you. Please call me with any questions. Have a great day. Something simple to that effect, and you're done. On this particular strategy, you're sharing with them, that reinvest in mortgage insurance. To get to that information, you can see that it says custom. They might have a question about custom. Click on more info. When you click on the more info button, it'll drop you into this tab where you can see payment breakdown, closing costs, or reinvestment strategy. So you direct them to click on the custom box, and it will show them on month 73. You're going to go ahead and make an additional payment of $85, and that's how you're going to accomplish the goal that we talked about. There you go. So that's if you're not able to assist them with a mortgage transaction at this point in time. Let's go to our last scenario now, and that's going to be, hey, I can help these people. So again, I'm going to take a quick pause, give you a chance to ask any questions about that last part of our presentation today. Go ahead and fire away if you have any questions. All right, let's go ahead. Again, I'm going to access my Mortgage Coach database. I'm going to locate that borrower's folder. I hit View All, Search. It's time to do Annual Mortgage Review Year 2. And all I have to do is go to Year 1, hit my Copy Analysis button, hit Current Client. It's going to go ahead and bring over all their data and everything that I talked about on the previous one. And now it's Year 2. Or I can go ahead and go to the one that I set up, do a copy from that one. I'm going to come to Year 2, open up the analysis, and this one has benefits. So I'm going to go ahead and Year 2, I might put what the benefit is in doing a mortgage transaction at this point in time. I'm going to come over. Now I am going to choose a goal, whether it's reduce their payments, lower their interest rate. I'm just going to go ahead and click on Other. At this time, after 2 years, they've gotten appreciation of $50,000. And what did they have on their first loan? Well, they were paying mortgage insurance. Remember, all these details are in here. So back in 2015, when I helped them with the loan, they took that loan and they've got mortgage insurance. I can see where their balance is. Again, I have their monthly costs all set. So I'm ready to go right into the product area. And in the product area, I am going to go ahead and, let's see here. I think I clicked on the wrong one here. Let me go ahead and go. My bad. It's Year 2 with benefit. Oh, for some reason I got these copied over there. Okay. Well, we're going to do a refinance form here. So what we're going to do is remove the mortgage insurance. Okay, yeah, this is the right one. I'm sorry. I confused myself. So I've named this product Remove MI. And removing the MI, what we're going to do is we're going to help them with refinance. So you can see the dial button now is in the refinance position. You won't see the notation of current loan over here. So rather than being no, it's yes. The value of the home in the current market, their equity position, their current base loan amount. I'm going to go ahead and maybe perhaps drop their rate slightly. And when I do that, I'm going to have to choose a closing costs fee template that you should have access to up here in the top right hand area, drop down menu. Go ahead and click on that, and that's going to give you the opportunity to go ahead and choose the appropriate fee template. Apply to loan. The borrower's monthly costs are there, but you also have to remember that most likely the mortgage insurance is going to be there as well. So you're going to just zero that out because on your new loan, you're not going to have mortgage insurance. The other thing, if you're doing a refinance transaction, you always want to make sure, or should the borrower indicate, I should say, that they don't want to come out of pocket for any costs, make sure that you put a check mark in this box so that everything is added to the loan amount and it's automatically bumped up for you so you don't have to do any calculations. So once you've got that in place, you're ready to go. We can go into the product area, or to the analysis area here, and you can see this product that I put together. So if they were to refinance now, here's their current loan. This is how much money that they would be saving in the refinance transaction. So they'll be saving $152 a month over their existing current loan now. Now I did add one other product to that, and I'm showing them in this the second product, the Reinvest MI product. I'm going to go ahead and click on yes, this is a refinance. I'm going to eliminate that product name, and I can even put together a strategy to show them how they become debt-free more quickly. So maybe I'll label this one mortgage acceleration or something to that effect. And in this one, what I'm going to do is it's a refinance transaction. Again, I'll drop their rate down to maybe 4%. Put in some closing costs. This is conventional refi. If there's any costs that are associated with it or prepaid points, and again, I want to make sure that I add everything in the loan amount. My monthly costs are there. I'm going to zero out the mortgage insurance because they're not going to have to pay that any longer. And then I'll go into the analysis area, and I'm going to show them that by adding $152 a month, and I'm going to put, beginning on month 1, $152 a month, what they're going to be able to accomplish. So by refinancing and using this strategy of investing the savings that they have, they can become debt-free rather than in 28 years, 24 and a half years. So you can take a quick look at the preview there, the presentation. There we go. Let me go ahead and make sure that the third product's there as well. So all I have to do is add a checkbox. There we go. The third product will pop up here in a second. And then there again, I have a plan A, a plan B, showing them how I can help them in refinancing. So there you go. I'll pause here for a second. I'm going to go ahead and bring up my slide here. Bring up that particular slide of the 10 points again one last time. And if you have any questions, now would be the time. All right. Well, I want to thank you folks there at Finance of America for joining me today. I hope this created some thoughts for you, inspire you folks to go ahead and employ this particular strategy to help you grow your business. I'm confident that it will help you at a minimum 10%. And if you're able to, like I said, ask for those referrals, it should help you even increase it greater than that 10% mark. So I want to thank you for joining me. You will receive a copy of this recording, and if I can help you out in any future training sessions, we do offer a lot of other training opportunities for you. You can just go to our website, Mortgage Coach. You don't have to wait for them specifically to be geared to your organization. We provide training opportunities for all our Mortgage Coach members, and to access those, all you have to do is click on our website, mortgagecoach.com, connect, go to our calendar, and you could go ahead and see all the different training opportunities that are available for you. We have training almost available for you every single day of the week. We do have a special series going on this month of December, 10 Days to Rockstar Status, where we put together a training session on a specific aspect of mortgage coaching, that particular strategy that you could put in place. So you're welcome to sign up for those. There's no cost for you. Take advantage of those training opportunities. Thanks so much for joining me. Have a great day. Take care. Bye-bye.